the rand trading around 7 rand 1, 7 rand 2 this morning, though we did see a bit of strength coming through yesterday. And of course, this follows that weakness we saw on Wednesday. Was that weakness, do you think, in response to the medium-term budget, or do you think we're really still following what the dollar's doing?
Good morning, Stephen. It looks like most of the rand yesterday was really driven by the dollar weakness, and that's the case because we know that there were increasing expectations that the Fed is likely to ease policy next week, and there were also reports by the IMF that the IMF thinks that the dollar is overvalued, and the combination of these two factors did take the dollar a little bit. They did affect the dollar weakness yesterday.
Of course, we are getting US GDP data this afternoon, so that's really more immediate impact perhaps for the dollar. What are the expectations on that front?
On the US GDP, the market is looking for an increase of 2% quarter-on-quarter, and that's up from 1.7% quarter-on-quarter. But I know it is one of the most important data released today, but then again, it remains to be seen how the market reacts to it and if it will have an effect on the expectations for further policy easing at the US next week.
Of course, there are growing expectations that rates could be cut again here in South Africa, and we had PPI data out yesterday coming in below expectations, 6.8% rise for September. We've also had money supply and credit extension numbers out today, and they seem to be a little bit stronger than expected, particularly the credit extension.
No, definitely. I mean, credit extension came in just a little bit above market expectation. It was up 4.4% from 3.0% year on year in August. And what we saw on the data is that once again, mortgage advances was the main driver for credit growth. But then when we look at the household credit, household corporate sector split, we did see that household continues to be the main driver there, with corporate credit demand still lagging a bit. And when we look at what it implies for interest rates, it looks like the data still bode well for interest rates, and including inflation data, which also undershoot market expectations. Both these factors or these data releases does support the view and that the Reserve Bank will cut interest rates. And with Standard Bank also, we have changed our view that interest rates will be cut in the next month's MPC meeting.
Well, just ahead of that FOMC on, I think, Wednesday, the decision is we also have those midterm elections. Would you expect this volatility in the dollar to continue, Tebogo?
I mean, it's likely to continue, Stephen. Also, basically, just looking at the fact that next week will be the FOMC meeting, and we are likely to see the dollar volatility continue, and we also have the ECB meeting and the BOE also meeting next week. So there's going to be a lot of talk around the quantitative easing for both the UK and the Euro area as well. So it's going to be a very interesting data next week.